Morning, everyone. Morning. It is October 3rd. Wow. I hope everyone's doing well. It's Tuesday. We got a little slip in the markets today. We're also long from the bottoms at these 93s, now trading 99.5. So, chef's kiss to that knife catch of the century. But we'll talk about the overall S&P 100 futures market in just a bit. What we're going to be doing is breaking down some of the news that's been going on, right? We've seen yields are climbing. We've seen a lot of individual sectors get absolutely blown apart, right? We still have yet to see tech, right, getting slammed down, even though there's a continuous legal battle, right? With Amazon, Google, like the Magnificent Seven or whatever the hell they're called. Now there's a battle over Google's alleged dominance that continues, and it looks that even the CEO of Microsoft resorts to using the search engine to start his day. You get up in the morning, brush your teeth, and search on Google, right? That's what Nadella said on the stand on Monday at Google's antitrust trial, right, referring to a dominance of the app. So the tech executives warned about the advent of AI, which could allow Google's monopoly to strengthen further as it could use the massive profits it makes from search to pay for exclusive rights to content it can use to improve its search in AI. Despite investing $100 billion, Nadella testifies that Microsoft's rival search tool Bing is a very low share player. Microsoft executive Jonathan Tinter previously testified that the company was unable to seal the deal to add Bing on Apple products. Even though it was offering better terms than Google, even Microsoft's own phone is required to use Google search to license the Android mobile operating system. Hold on, give me a second here. We're at the O2s. O2. So we're in this long trade here. Um, I'm just trying to get out some of this position. So, um, the U.S. Department of Justice is accusing Alphabet's search division of unlawfully maintaining a monopoly by paying $10 billion a year to make its search engine the default option. And Google denies the allegations. The government is using the case of Bing and Microsoft's might behind it as evidence that even with massive resources, no one can trump Google, right? A decision on the case is not expected until next year. So, still, this brings into play the big tech names, right? Recently, what we've been seeing in the market is very large tech names they're still sustaining some of their hold as all other sectors pretty much and all other things are dropping pretty aggressively. The 10-year yield, this is of big concern. I know a lot of people are looking at this and they're getting very bearish on the US on the US economy and the US stock market as the 10-year just explodes higher. We reached a high of 4.752 or 1, I believe, here pre-market, and now we're dropping down, right? Somewhat significantly, but very strong upside move in the US yields, right? As we have the notion that the Fed's going to keep rates higher for longer. This also put a lot of downside pressure in the utilities market that got crushed in the recent few sessions, where we had a lot of downside because they're very closely tied with these yields. And as yields go up, right, the return on the utilities, which are considered more of a safe haven asset, are dropping significantly, right? So this puts a lot of downside pressure in that sector, and a lot of money is flowing out of it and starting to flow into things like tech, which are sustaining really well right now, right? That's the final drop that I'm looking for in this market before we see things just dropping, things just rallying into the end of the year, right? I'm looking for a drop, a little head fake to the downside, right? Get those late shorts super trapped, and then start reversing in the next 2 weeks or so. With these very high yields, a lot of people are looking at this as a massive credit event that the market's going to absolutely get destroyed very soon, and everyone's effed, and you're so effed, right? The reality of the situation is we've seen rates this high, and the market has continued to the upside. Yes, there are a lot of underlying factors, but things do lag necessarily, right? So keep that in mind. Um, we also have oil right in the mix that's putting upside pressure on inflation. We have We have a lot of things that are holding out here. So one of the things, U.S. shale producers plan to keep drilling under wraps, even if oil prices top $100 a barrel. The need for financial discipline during what they see as President Biden's war on fossil fuel production. Many companies cited that Biden administration decisions to limit drilling on federal lands and waters as the main reason they are restricting investments, as well as ongoing permitting delays and often hostile rhetoric from the administration's political power, right? Asserted Continental Resources founder Harold Hamm. They believe that it is what their base wants. Note that the U.S. shale companies reinvested most of their capital in production this year, although there are fewer active U.S. oil rigs. And of course, oil, right? It's been on the radar for the past few weeks. If you've been following us, past few months actually, that we've been looking for that upside of oil. But I think it's time we do pull back for the coming few weeks before we do continue that upside leg. I think even into end of 2023, Q4, Q1 of 2024, we do see more upside in the U.S. oil prices. We also have Tesla right in the mix. Tesla turnaround pre-market losses and moved into positive territory on Monday, closing up at 0.6% as investors sized up the Austin-based automaker's Q3 deliveries report. Tesla delivered 35,000 vehicles or so during Q3, missing expectations on account of longer than expected downtimes for factory upgrades. So crucially, Tesla remains committed to the target of 1.8 million deliveries for the year. So we'll see how that does shape up. But realistically, when I look at Tesla, I think there's a short opportunity into the end of the month along with tech. I don't want to get too handsy with tech, but it's looking as that might be the case. Now, moving over into the equity markets, right? We'll take a look at these. A lot of people are still very fearful as U.S. yields continue to climb, but the market hasn't died yet, right? There's one missing piece that's been holding up this whole thing for a very long time now, and it's doing its part right now as well to sustain it very, very aggressively, in the sense that we have tech, right? Tech has been sustaining the market pretty well here. So the tech is the last sector, Magnificent Seven, call them what you will. I don't like, you got Microsoft, Google, Amazon, Apple, so on and so forth. These massive, massive mega cap tech names, Nvidia, are sustaining the overall market extremely well in the most recent conditions, right? As things are dropping, yields are up, right? Inflation is still a main source of concern. And these are the last dominoes to tumble that are actually holding pretty much this whole market up, right? Very few select companies that make up a large portion of the overall market's weight, right, are still not getting destroyed, which is sustaining some kind of at least sideways momentum in this market. Until those go down, which they do have the potential in the coming 2 weeks, I think, as that final rug pull happens, or more of a slow controlled sell, then we can start thinking about bottoming prices in just the general market. Right now, we're in a limbo. We're in a sideways chop action. The S&P 500 futures, we pierced the lows of yesterday just barely before getting a nice little pop. But overall, what's happening right now, I'd like to see a pop off of these lows to see some kind of re-offer a little higher, right? There was a massive, massive seller on the S&P that's been here for days on the overnight session, right? Now that I'm in Europe, I can stock the overnight session, but this guy's appeared multiple days in a row, just hammering sells from about 27, 28, 26 on the S&P 500 futures, dunking these guys aggressively, causing these massive drops and holding that key area as a huge sell area. Yesterday, we said we're looking for sells between 26, 27, or sorry, 25, 28, somewhere there. And the final sell at 35, 37, which held out. The same thing happened today overnight, presenting a plethora of great short opportunities. But I want to see if they can pull this up a little higher so they can short it a little lower, meaning 43.15 area, see if they can hammer it as a lower low to actually break that low, come down to that mid 70 area, then we can readjust our thinking. From there, we could probably see a little more upside, but I want to see if those sellers really have what it takes today to actually break through that 90 and hold through that 90. But we've dropped very significantly here pre-market, so a little profit taking, a little buy stop run isn't out of the ordinary off the open to see where they can readjust the sell side momentum again. So we'll see how that shapes up. Our little long, right, it ran about like 9, 8, 9, 10 handles or so. Right now pulling back down, there's a lot of sellers that appear around 01, 02, 03, which is the distribution excuse me, the prior larger distribution low. So what we're going to do is we're going to open up our live trading room. I hope to see you guys there. We're going to do this again tomorrow, and check out our free futures course on our website. And happy Tuesday, happy trading, and let's see what we get for the rest of the week.